Despite that news of the Cyprus bailout today, it was still a nerve-wracking day for investors. Joining us now with more analysis on what's next for the markets, Doug Sandler. He's chief equity strategist at Riverfront Investment Group. Doug, I want to pick up on these comments that really spooked out investors today from that Dutch finance minister, first saying that this bank bailout in Cyprus could be a template for future bank bailouts, and that banks could look to their own customers to help in a bailout. How should we factor this into our thinking as American investors?
Well, I think the bank solution in the end wasn't all too surprising. In the end, the good news is the insured depositors. The EU stuck to the contract they have with those depositors, so that's good news. I think what it means to the U.S. is, you're likely to get some black clouds appearing on the horizon, but in the end, I think it's wrong to believe that the safe place to sit in this market is on the sidelines. The 30,000-foot view that I think investors have to take is there's a lot of debt, and it's currently in the public sector, and that public sector debt is ultimately getting transferred to taxpayers, as it always does. So in the end, you're going to see taxes rise, you're going to see low interest rates, zero interest rate policies, and you're going to see quantitative easing. And the investors that sit on the sidelines are going to see, one, no return on their money, and two, they're going to see the value of their money eroded underneath them.
Doug, I'm going to figure that Cyprus is going to recede as a tension point here over the next couple of months. But my question for you is, do you think that U.S. equities have had their gains for 2013?
I think we made a quick leap into the year, so I'd say on the valuation standpoint, they may have. So when we look at U.S. equities, you really get, your prices go up for two reasons. One is the earnings go up, and two is the valuation multiple assigned to those earnings goes up. So year to date, we've seen about a 10% increase in the S&P. That's mostly due to valuations going up. I think that game's probably in the later innings. But I think there's plenty of room for earnings to grow. And earnings grow as a result of people having more jobs and buying more things, result of the housing crisis being behind us, and all of a sudden people feel more confident and their house price goes up and they put money into their homes and into other things. I think there's plenty of potential for earnings to grow. And, there's a lot of good news going on in the U.S. You have a manufacturing renaissance, you have a really energy bonanza, and a lot of these things are going to equate to higher earnings. So I think the market can go higher. I think there's a real risk of having too much money in non-productive assets on the sidelines.
Doug, for a long time, individual investors were fearful of the markets and saying they were too scared to get into the markets. And now they're so scared that they've missed this market rally. What do you say to your clients when they bring up that question to you? Is it too late to buy in now?
Well, so I think a lot of people look at the last couple of times the market was at these levels. So in the year 2000, the year 2007, and now again today, the S&P was at about 1550. What I would point out is those were very different valuations. In 2000, the market was trading almost near 30 times earnings. In 2007, it was about 16 or 17 times earnings, and today it's at 14 times earnings. So the stocks, even though they're at the same price, there's much more earnings underlying them and providing a foundation for valuations. So I believe one is valuations are fair, and then we see central banks around the world have kept interest rates low and are quantitative easing or printing money. In the end, those dollars will flow into stocks and make them go higher.
Doug, I want to come back to earnings, which you think are going to go higher, but I've been reading estimates that the first quarter earnings aren't going to be particularly positive compared with a year ago. Are you expecting the second half or the second 3 quarters of this year to be better than the first quarter in terms of earnings growth? Quickly.
Yeah, Tyler, that's probably the best news I've heard all day, which is that expectations are low. In the stock market, there's this thing I call the phenomenon, or the report card phenomenon. And that is, if you're expecting Ds from companies and they come in with Cs, it's a positive surprise. And that's what happened in the first quarter. I think it's again going to happen in the second quarter, that expectations are still pretty low. Remember, we're just coming off a fiscal cliff and a sequestration process. So estimates are pretty low. In the end, I think companies will beat them, and I think the market will respond positively to that.
All right. Thank you so much, Doug. Doug Sandler, chief equity strategist at Riverfront Investment Group.